Hello traders and welcome to another video review. Today is Thursday, May 15th, 2024. Let's find out what's going on the Forex economic calendar for today. Overnight data were in form of the building consents from the New Zealand worse than expected. We got the building approvals and private new capital expenditures from the Australia. Building approvals fell down to minus 0.3%, which was way below the expectations of 1.8%. But new capital expenditure increased from 0.9% to 1%, beating the expectations of 0.6%. We got still the GDP and COF leading indicators data scheduled for release from the Switzerland, 9 o'clock sharp on the 9 o'clock. We got the data from the Eurozone. Unemployment rate is scheduled for release at 11 o'clock. The market participants expect the unemployment rate to stay at the level of 6.5%. And 1 hour later, the Eurogroup meeting will start. GDP data from the US are scheduled for release at 2:30, together with the GDP price index and the good trade balance and the retail inventories excluding autos. GDP in the US is expected to drop from 3.4% to 1.6%. So very important data release from the US. Please stay focused during this data release. We got as well initial jobless claims scheduled for release at 2:30. The initial jobless claims are expected to increase from 215,000 to 218,000. Pending home sales from the US are scheduled for release at 4 o'clock. Crude oil inventories together with the Cushing crude oil inventories are scheduled for release at 5 o'clock. And then at the end of the day, we got the Bank of England Governor Bailey to give a speech and Fed balance sheet. This data is scheduled for release at 10:30. So the US session seems to be very important for the macro data watchers and all of this fundamental traders. So please stay focused, stay vigilant. But because of the data that were released already, we are going to start our technical part with the review of the euro dollar. For our chart of the euro dollar is showing us very interesting pattern as we get rejected from the last local high 1.0895. The high was 1.0890, so only 5 pips away, but it wasn't touched, right? It wasn't touched anyway, so that means it wasn't tested 1.0895. Nevertheless, we got the very interesting bar here. Looks like there is a bullish engulfing previously, and this looks like a kind of a pin bar for sure, but it looks as well as the shooting star. So the pin bar in form of the shooting star made on the bounce towards the 1.0895. 1.0890 was the high. Then we got the reversal, confirmation and extension to the downside. Right now the bulls are trying to bounce from the extremely oversold market conditions on a 4-hour chart and trying to bounce back up from the technical support located at 1.0790. So right now let me just get rid of this line because it's not right, not necessarily that much. Any breakout below this demand zone, 1.0790 is the 92, basically is the low of this supply zone. Any breakout below this supply zone would likely extend the downside movement towards 1.0754, especially if the data from the US will beat the expectations. So we might see further deterioration towards even more extremely oversold market conditions, and then of course the bounce is expected. Please notice that we got this very nice breakout above the trend line. I'm talking about the orange trend line, but the market wasn't ready to rally higher, and 1.0895 is for now the swing high as we got the new local low. So This level here is still not the key technical support, it's just the regular technical support. 1.0754, 1.0741 is another one, 1.0725 is another one. The key one is here where the green rectangle is, so there is still some room to the downside for the best. If we notice the cycle that the development to the upside took place, the shape of the cycle looks A, B, C, free wave only, and that's never impulsive, right? So possibly this movement to the downside might be a little bit more stronger than the regular correction, especially if we get the impulsive cycle fully developed down towards the demand zone. So that's the outlook for the euro dollar. Because of the data from the UK, let's take a look at the British pound, and finally here we are. We got this bullish engulfing pattern in wave 5 at the end of the wave 5, but it looks like this situation here might be a little bit more adjusted, and that's the situation we want to have. So what do we have is apparently this nice bearish divergence. There is still bearish divergence here between wave 3 and wave 5. We got the bearish engulfing. We got the bearish engulfing here at the top of the wave 5 as well. And now we have a sharp reversal. So finally 5 wave impulsive cycle had been completed, and we broke below this high here, so we can remove it. Now we are about to test the lows from the May 24th, located at 1.2675, and any breakout below this low would likely extend the drop towards 1.2731, and then even 1.2632, 1.2623, and 1.2611. Okay, so right now 5 wave advance to the upside had been completed. What do we have here right now is ABC corrective pattern. So this is what we should expect right now: wave A, wave B, possibly wave C, but the targets for the wave C are now unknown. We know that momentum is still negative, is at the level of the 33 points. It still has some room to the downside. This is why we might see lower levels on the British pound soon. Nevertheless, please notice the fact that when the extremely oversold conditions are hit, pullback is expected. So possibly wave A will be done a little bit lower than the pullback in the wave B, and then the continuation in the wave C. ABC corrective pattern is the simplest one, so it's not time consuming, it's not complex, it's just ABC. But this let's say this cycle might evolve into something completely different, so please stay focused and vigilant, especially during the wave B correction. So because of the data from the US, let's take a look at the SP500. What do we see here is some sort of the very nice uptrend since the low of the 27th of October 2023. The recent correction that you see here had hit the 4,952 points level. Since then, we've been moving higher towards the recent all-time high located at 5,349. We still have this intraday technical support that might intraday is here, might act as the very nice support for the bulls. Okay, so we got this level 5,256, but we still have the one that I wanted to show you earlier. We still got this one, and this is very important level, the technical support level. However, it's been tested twice already. So if we got a daily close below 5,256, the outlook is will change basically temporary for more bearish, especially because on a daily time frame chart the 70 points level has been hit and the market is reversing towards the level of 50. So it's the momentum is still strong, it's still positive. However, it's pointing to the downside, so any breakout below the level of 50 would likely extend the drop even lower. The next technical target is located at 5,122. Yes, this is the next technical target, technical support basically. The key technical support is located at 4,953. So that's still the key technical support. There you go. So this is how it looks like on the S&P 500. In the background, the prevailing trend is still up. Okay, that was the S&P 500. Let me then just take a look at the Bitcoin at the end of our analysis. What do we have here on the Bitcoin? We are still developing the wave 4. So the market keeps moving inside of a very narrow range with extreme low at 66,261 and a local high at 70,614. Please notice that this 50 and 100 periods moving average are getting tighter. They are getting towards each other, which means the volatility is right now lower. So if the market participants, especially bulls, want to break out to the upside in order to continue the last impulsive rally as a wave 5, it's about the time to do this. We will copy this short-term trend line in order to get it here as a part of the situation with the wave 3 top and possible wave 4 correction, right? So again, we are waiting for this kind of a pattern here. Correction, then breakout test, and off we go. So correction, breakout above the orange trend line, test, and off we go. Will this scenario be present on the Bitcoin? I'm not quite sure, but this is one of the possible scenarios for the Bitcoin these days. Please notice the fact that okay, let me just move the demand zone. This is the key demand zone. Please notice the fact that if we break below green dashed line, which is the top for the wave 1, the whole impulsive structure will get invalidated. And instead of that, the best alternate count is from this low of 56,436. First wave will be wave A, correction wave B, and wave C instead of the wave 3. So that means still some sort of the corrective development, not impulsive development, as the market is getting ready for another wave to the downside, possibly again in the impulsive fashion. So please stay focused, stay vigilant for the Bitcoin, as there is a nice chance for the Bitcoin to bounce back above the trend line and then go above the level of $70,000 right into the big supply zone, very, very close to the last all-time high. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.